Our guest has something of a reality check for us. He says, we don't really realize what it will mean to restore affordability in housing. Home affordability, by his measure, the work he and his colleagues have been doing, is at its lowest point in Canada in 40 years. And of course, interest rates have been going up. That's made the problem worse. We're joined by Charles St. Arnaud, Chief Economist at Alberta Central, a former economist at the Bank of Canada. Charles, it's great to see you.
Good afternoon.
Before we get into the scale of the problem, you reckon in Canada, and it varies by market, I know, of course, but we're at the least affordability in housing in 4 decades?
Yeah, well, when we look at the data from 1980s to now, if we look at especially Toronto and Vancouver, we've seen we're seeing some of the least affordable housing markets over the period. And in the case of Ottawa and Montreal, it's actually the least affordable since 1981, when interest rates were close to 20%. So we're really in a very strange situation.
You say that in Toronto, the brutal reality is house prices would have to fall by half, or incomes would have to double to make it a reasonably affordable market?
Yeah, that's using current level of interest rate, using current level of income and current house prices. So depending on which one we move. So obviously those are big. And actually in the case of interest rate, if we were just to move interest rate, we need actually negative interest rates in Toronto to restore affordability, not something we're going to see.
The politicians, of course, like to talk about increasing supply, but you say that's going to be a long job. And I don't know if it's even clear whether we have the capital or the skilled workers to do that.
Yeah, well, the piece doesn't address that, and that's something I want to turn in the next few weeks and look into the capital requirement. But when we just look at it, when we think about, for example, in Toronto, if we normalize interest rate, we're probably about 200 basis points higher than when we were on average pre-pandemic. You still need a decline in house prices of 40% or an increase in income of about 65%. So it will take time, and depending on how we do it. So through prices will be faster, but I'm not sure homeowner will be happy to see a decline of 40% of their home values. But on the flip side, if we just do the adjustment through income, well, if we make the assumption that income it will increase by 4% every year, and by the way, it increased by about 3.7% in the decade pre-pandemic, it will take 13 years to solve the affordability issue actually 18 years, in Toronto. So it's a long slog. So the question is, are we willing to wait that long and perpetuate the same all those costs on the economy, or we rather have a quicker adjustment? But at the end, it's still homeowners will have to pay. It's either house prices will have to stay flat for an extended period of time, or we'll have to see some declines.
You reckon that if voters see their house prices actually dropping, they won't be so delighted, and they'll probably let the politicians hear about it.
Well, that's the thing, is that for many who bought houses over the past, 5 years for sure, price decline might spell trouble financially for them because they might get into negative equity. But even those who have been owning for a decent amount of time, they might not be willing to see the value of their main asset stagnate or decline. So we might start to see some homeowners being a bit less enthusiastic about solving affordability. So that's where it might be a long slog. And I'm actually worried that we might actually be in a situation where house prices in Canada are actually permanently unaffordable.
Permanently. Even if we get, if house prices stayed flat, we'd have to wait for incomes to catch up, and it would take a long time.
Yeah, we're talking in Canada as a whole, at least a decade before we get back to the average affordability that we had since the 1980s.
And are we just too obsessed about housing, investing ever more in it instead of investing in more productive things?
Well, that's one of the big questions, is that what has not been done to make the situation where we are now. We know we've had big demographic change, very strong immigration. lack of supply, housing has not been following, but it's not recent. We've been talking about affordability issues, especially in Vancouver and Toronto, since the early 2010s. And yet, nothing has been really done to address. So we kind of left the problem to fester for too long.
You have a chart for us which demonstrates the scale of the problem in markets such as Toronto. So housing prices in Toronto would need to fall by half, Montreal by 43%, Vancouver 38% to restore affordability. And you do know that's everything else being equal, including incomes and interest rates. I mean, but that looks like it would be political poison, and homeowners tend to vote.
Yeah, and that's my concern. That just has concern on the homeowner side is that obviously those suburbs in major city are very big, powerful voting blocks. So that will be interesting to see how they react if they see the value of their housing decline. So we might start to see some pushback politically. But also, I'm also wondering on the supply side, how willing are home builders to increase their supply when they know that the price they get now is as high as they're going to get? There's no possibility of selling those at higher value later, or even for rental units, because it's the same. If we increase the supply of rental units, rents will stay where they are. So as a landlord, well, what you get now might be as good as it gets in terms of income. So there's a lot of ramification that we have to think about when we talk about affordability.